as we take a look at some of the names to watch, Diane King Hall is with us, host of Morning Movers here, taking a look at some of the names. And so we'll start off, Diane, with Carmax. Tell us a little bit about that story.
A really, really bumpy road for Carmax. That, no pun intended there. The stock is down even sharper during trading than what was indicated in the pre-market. So the stock taking a big hit this morning, off by about 20% off the back of its latest result. It missed expectations on both the top and the bottom line for Carmax. Really difficult landscape for this used car retailer. Posted earnings of 64 cents per share. That was well short of estimates. Revenue came in below $6.6 billion. So you put that in perspective. Adjusted EPS, the street was looking for $1.09 and earning just 64 cents on an adjusted basis. Not a good look for Carmax. Revenue coming in again below $6.6 billion. The street was looking for more than $7 billion. So again, just the pressure is on. And then you have weaker than expected overall sales. That same store sales metric for Carmax dropping 6.3%. The street was looking for at least some growth. They were looking for more than 1% growth there. So overall, really, really difficult landscape, especially for investors who've tried to stick by Carmax. It's already been a difficult year for it, so the pain trade is on for Carmax. Again, those across the board, investors were looking for annual increases across a variety of categories, and it's just a reversal from a few months ago. The CEO saying the second quarter was, quote, challenging. He announced some plans to cut costs over the next 18 months, planning to cut costs by $150 million there. So again, and then you also had car prices, used car prices falling as well. So it's not just about the demand picture there, it's the selling price point there as well. So just the pressure is on Carmax, Nicole.
Yeah, lowest level since 2020. That's terrible.
I know.
And you know, when you think about how folks are keeping their cars longer, you know, there might have been a bright spot here, but certainly it's been a tough time for shareholders, seeing it down 20%, almost 20% today. And then the tough time has been for Brian Niccol trying to turn Starbucks around. $1 billion restructuring going to be underway here.
Yes, and so when we hear restructuring, we know that obviously involves cutting costs and job cuts as well. So hundreds of jobs are on the chopping block at Starbucks. Some of that will actually be just roles that are posted that are closing. So you are seeing shares move marginally higher, just above the flat line in reaction to this. The job cuts will be in non-retail positions. Open positions, as I mentioned, will be closed. This adds on to their plan, this Back to Starbucks initiative, where they're trying to revive sales through a variety of methods. They're closing some stores as well. So again, trying to streamline operations, improve the in-store experience for consumers. So trying to reduce the underperforming stores as well. They said workers whose roles will be eliminated will be notified by a Friday morning. And that follows that decision by Starbucks earlier this year to slash more than 1,000 jobs. So adding on to that in just an effort to just kind of adjust and, you know, shift the sands for Starbucks. They said they will phase out the stores that are focused solely on a mobile ordering and pickup because those were, quote, overly transactional. Nicole.
All right. And last but not least, Lululemon. I know they've had inventory concerns and things like that. What's the latest here?
Another day, another downgrade for Lululemon. This one is Needham. Needham believes that the competitive environment is too challenging right now for Lululemon. They're moving to the sidelines, downgrading it to a hold. They don't give a price target on this one, so it just shows a lack of conviction here. And again, Nicole, you know this well. A lot of times when you see a hold rating, it's essentially the equivalent of a buy rating, or excuse me, equivalent of a sell rating rather. This comes on the heels of Bear downgrading the stock as well. So not a lot of love for Lululemon this year. It's already fallen more than 50% year to date. So you add this move today, takes it down even further. So again, they're worried about the competitive environment. A lot of the challenges for Lululemon this year has been about the tariff risk, because they thought they would not have that tariff risk because they had over the years reduced their reliance on China. But again, they have exposure to Vietnam, et cetera. So they have more tariff risk than expected, and also their choice of options, they are managing to make changes to their inventory, just hasn't really been hitting the mark with consumers.
So look, I mean, I know it's, we had said without a price target, but I do see a price target here of 192, hold from buy. It's been a tough go here for Lulu. That gap down on the earnings, and then another gap down on the earnings. I mean, the one over summer, the one over the fall now. A tough go of it. Year to date, down 53% or so. So really a tough time for Lulu. Let's see.
Thank you for that catch.
The bright spot might be, I mean, I don't know how much of a bright spot, but I'll throw it in there. The Amex Platinum card is going to have a $300 credit for Lulu. So maybe the wealthy customers will go in there. I mean, $300 is pretty sizable.
Yeah, and listen, maybe they will get, kind of a return to the good old days for Lululemon. We'll see.
All right, Diane King Hall, great to see you. Catch her every day at 8 and noon here